Good evening, I am Ibrahim Sani and you are watching Market Talk. Southeast Asia is poised for more growth, straddling between two key markets of China and India. One can easily assume that cargo business would be a key feature. In the studio joining me now is Kalmar, a cargo handling solutions and services provider. Kalmar offers the widest range of cargo handling solutions to ports, terminals, distribution centers and heavy industries, including those in Malaysia. Headquartered in Finland, Kalmar is an industry frontrunner in terminal automation and energy-efficient container handling. Joining me is Mr. Peter McLean, Senior Vice President of Kalmar of Asia-Pacific. Welcome to the show, Peter.
Thank you for inviting me.
So let's talk a little bit more about Kalmar per se. In your own words, can you go through with us the business of Kalmar?
The business of Kalmar is we're an engineering technology company that helps our customers move cargo more efficiently. And that's through the way of equipment, maintenance and technology.
And of course, there are three key business pillars within your company, which is the sea business, ports, or terminal, and an inland business.
Correct.
I wish to highlight the biggest revenue driver of Kalmar, which is the ports and terminal business.
Yes.
Is this a significant area for Kalmar to focus on?
Yes, the whole of Asia-Pacific, of course, is significant to Kalmar because on a global base, Asia-Pacific is the largest volume of container movements in the world. And that's because of predominantly the area we are in, which is ASEAN, and then, of course, China. So it's huge. And ASEAN, or Malaysia, where we are now, is a 25% contributor to the ASEAN turnover of containers, so it's very large.
The key market would be in the Southeast Asian region, and of course the key ports here we're looking at would be with Singapore Port and perhaps Klang Port. Do you think that the business of these ports will bring in more traffic in the coming years to come?
Absolutely, especially with the OBOR initiative. And then, of course, with the rail link between East and West in Malaysia. And Malaysia is geographically placed that it's an ideal transshipment hub. So, you know, the more efficient business or customer-wise Malaysia can be to the shipping industry, the more business Malaysia will get. So it's about trying to be efficient and attract that shipping customers. And then, of course, the business will grow. And linked with OBOR, the opportunities are endless.
And this is the interesting part, because while Malaysia is strategically, geographically placed, the volume of trade between Malaysian ports is nowhere near Singapore. In fact, no. TEU numbers of Singapore actually pales in comparison to Malaysia. Malaysian numbers pales in comparison to Singapore. Yes. Why do you think this is the case?
Singapore, in the past, I guess it's one big terminal. And the volume that goes through there and the efficiency that Singapore have been able to provide the shipping client attracts the shipping customers to Singapore. But of course that race is on between the two countries because they're so close. And with Singapore, you can look across and see Johor. And that way with a shipping company, it's which way do I go? So, you know, whoever offers the most cost-effective and efficient service to the shipping company at the end of the day will win or attract the most business.
There are significant efforts to make these two cities closer between KL and Singapore. Yes. The high-speed rail project is well underway. How do you think this will change current scenario?
It will, because it's going to attract a lot more opportunities in intermodal, of course, because of the rail link. And that rail link even offers efficiencies in time of up to a 30-hour, you know, more attractive timing to ship from east to west. So there's a lot of opportunities that rail link will offer, and that's without talking about the link to OBOR.
All right. Okay. So you've been mentioning OBOR for a few times now. Of
yes.
course, this is we're speaking about the One Belt, One Road initiative coming out of China. This connects the major cities of China in the rest of the world, for that matter, let alone Southeast Asia. We're looking at better growth or trade routes between Singapore all the way to the Indo-China region, and perhaps the southern cities of China, Guangzhou and Hangzhou, perhaps even somewhere north in China. Do you think that the business of inland logistics will be a key feature under the OBO initiative, meaning that the focus will be more on inland rather than on sea?
It's a mixture. You know, the OBOR initiative is both inland and both at ports. And, you know, it links 64 countries. So it's quite an initiative in the logistics industry. And with e-commerce being so attractive and growing at such a fast rate, of course, the logistics industry will feed that e-commerce. And with those 64 countries linking together, we've already enjoyed significant business growth in China, where OBOR starts on intermodal projects and inland, whilst in parallel to that, we're seeing container terminals at the ports start to grow. So it's all linking together, and that's now coming down through Asia and spreading back up into Europe.
Peter, we'll take a short break, but when we come back, we'll discuss on the immigration aspect of the logistics business. Don't go anywhere. Welcome back to Market Talk. I'm your host, Ibrahim Sani. Today we're talking about logistics, and joining me is Peter McLean, the Senior Vice President of Kalmar of Asia-Pacific. Let's pick up where we left off. We were talking about OBO and how it connects 64 countries together. And while, you know, the roads and the seaports are there for us to connect, there will be checkpoints in between these countries, and that checkpoints would provide some sort of the way I would see it, a hindrance towards how businesses would operate between one another. As a company, what is your opinion on making things smoother between these checkpoints, between this immigrations and customs area, and make it smooth in terms of delivering the goods that is being transferred between all these ports?
Yeah, that's an interesting question. I mean, you know, if cargo starts at one point and goes to another, of course, through this OBOR initiative, it will flow, because there'll be no decanting of vessels or containers. But, you know, even in a transshipment environment, that's smooth because it's on-off. So it really isn't a bottleneck. You know, if it's going from country A to country B and it has to cross 10 countries, well, then there won't be a logistics bottleneck in that flow. It'll only be when it gets. Do
you really think that would be the case? I mean, of course, on paper, on blueprint, that would be the ideal scenario. But sometimes when one would roll out these kind of transnational policies, you would expect some hiccups to take place. Do you think that these hiccups would be substantial to businesses?
I don't think so, because you politically, every country is really trying to get on board and capture the commercial advantage of being part of one belt, one road. And if you think about the logistics or the shipping industry, so if a container is shipped from Europe and it comes to Malaysia for transshipment to go into the Pacific Islands or somewhere, I mean, there's no hiccup other than it's off the vessel and back on a vessel, and it doesn't leave that bonded area, so it doesn't have to go through customs. So I think as long as politically everyone is on board, I don't think there will be any bottlenecks.
Let's talk about the political aspect of this then. We now know that these countries that are in this OBO framework, all of them would stand to benefit one way or another. But there are markets that are cut out from this particular big pie. I'm talking about the Americas. I'm talking about some parts of Europe. How do you think that these countries will manage the situation once OBOR truly is well underway?
Be interesting, because in the past 12 months, of course, we've seen a lot about global trade and whether people want to ramp that up or they want to slow it down. And of course, global trade is really what helps a lot of countries develop. And I think the One Belt, One Road is really going to make all of those 64 countries that are involved very competitive in the global trade market. So it's got to be a benefit to everybody. There's no doubt about it.
Let's go micro a bit. Last year, Kalmar was awarded a $23 million contract to upgrade 7 ship-to-shore cranes at PTP, Port of Tanjung Pelepas. How's that coming along?
Yes, going well. We're scheduled to finish that project at the end of the year, and we are on schedule to do that, which then will make room for them to bring other new equipment in and get their efficiencies happening in that port. So yes, it's going good.
Of course, PTP sits on the west side of the southern shore of Malaysia. Johor Port in Pasir Gudang sits on the east side. In between, you have that big island called Singapore. Do you think that Johor, and for that matter Malaysia, have that competitive advantage to tackle the logistics requirement of shipping in the Straits of Malacca?
Every bit. They certainly have equal opportunity to Singapore because of the geographical position of Singapore and Malaysia. There's no reason that Malaysia can't do equal trade to Singapore or vice versa. It will just come down to the efficiencies and the reliability that these container terminals offer their customer, which is the shipping company, and then of course the inland customer.
Can we expect more ship-to-shore crane contracts that Kalmar will be courting in the near term?
Yes, most definitely. There'll be ship-to-shore contracts, but there will be also yard crane contracts. And yard cranes could be rubber-tired gantries or automatic stacking cranes, which improve the efficiency of the container movement and the density of containers you can stack in your available area in the yard.
There's also crane refurbishment projects that is happening in Perak. Would you care to take us through that project?
Crane refurbishment comes, a typical key crane lasts some 20, 25 years, and it has a lot of moving parts in it. So mid-term, of course, usually customers look at upgrading their cranes, and a lot of times that can even be when there's a need to make the crane larger, and if engineering-wise it was designed in the first place that it can be lifted or the boom can be stretched, a lot of customers look at doing that, and we're going through that mid-year refurbishment with those cranes. So there's a lot of new drives and components put in them, and structurally they're tested to make sure that they're okay and can go for that second half of their life.
How do you envision Kalmar growing your business here in Malaysia?
So we have a very good base today, and the base in Malaysia at our what we call our frontline business employs some 90 people today, and that business predominantly is the engineering business of refurbishing and upgrading cranes, and it also provides parts and maintenance to the ports on a regular basis, plus we provide and we sell mobile equipment. And we want to grow that business into the automation segment in due course.
We'll take a short break, Peter, but when we come back, we'll definitely discuss automation and how this will actually improve productivity. Don't go anywhere. You're watching Market Talk. I am Ibrahim Sani. Today we're talking about logistics business. Joining me is Peter McLean, Senior Vice President of Kalmar. Of course, there is a case to be made on automation. How do you think Malaysia and some countries in the Asia-Pacific region can leverage upon automation, and how do you think this can make things a little bit more efficient for the cargo business?
Automation, some people look at it and think that automation, you're going to buy automation and you're just going to push a button and it's going to make everything operate quicker. That's not really what automation's about.
Sorry, that was exactly, that was in my mind. I mean,
Yes.
press go, things are done.
No. Automation, it provides a multitude of advantages. One is, of course, in an automated environment, there are no humans. So when you run an automated environment, whether it be an internal warehouse or it be a container terminal, you have nobody in that environment when that automation is working. So the big thing is it's safe. It's safe for humans. We have fully automated ports where they have, in an annual basis, no lost time injuries whatsoever in a given 12-month period. So the first factor is it's safe. The second thing is, if you think about automation, is it doesn't need a lunch break. It doesn't take annual leave. So the efficiency of automation is that it will run even in the dark. So sustainability comes into automation because you don't need as much electricity, because you don't need lights at night. So that's one other advantage. Automation is a bit like, I don't know whether you've ever driven like a slot car.
Okay.
And raced your friends, or watched racing cars. But automation is fast but consistent. It's not the fastest. If you put a manual terminal beside an automated terminal and it's a one ship project, you could beat automation.
Okay.
But when you have 10 ships or 20 ships on an annual basis, automation will win because it's consistent.
No business that I know of will reject efficiency, but every single business that even I don't know of will think about cost as a huge element to transition between the status quo to pure automation.
Yes.
And I noticed that you picked up on two things, which is on the efficiency of things with little to no human involvement, but there's no mention of cost. So is this a key significant area that we need to focus on? Would automation incur so much cost, the cost of transitioning from status quo to envision a future where automation takes place? How would cost look like with this transition taking place?
The payback on a typical automated terminal is quite fast. So yes, there's no doubt that when you automate, there's a significant capital cost. But it's rare for an operator, a container terminal operator, to just decide to automate because he wants to get efficiency. They usually decide to invest in automation because they need to start to replace some of their equipment. And a lot of places, unless you're building a whole new terminal, when they need to replace, it could be just a simple gate system. It could be, I need some new key cranes. It could be, I need to look at my yard environment. They start to look at new equipment. And it's like anything you buy at home. If you buy a new television, you can't buy the model you had last time and it's got some more automation involved, or a car. And that's what happens in our industry. So even people who aren't even thinking automation trip and buy automation because they're buying the newest piece of equipment that's got some connectivity or some automated feature in it. And that's the start of building an automated terminal. So it's usually through the replacement of equipment and then thinking about all the other things that come on that trigger this start in the automation world.
Okay, if we take your word for it, that the payback could be fast, right? These are the users of automation. Yes. These are the companies, these are the ports that will actually consume these kind of products. Then there is the service provider, which is a company like yours.
Yes.
I would imagine there's a lot of money incurring during the R&D process, particularly when you want to ensure that the product that you give would be flawless, at least, or near to flawless.
Yes.
Would that incur so much cost on your end, on trying to build that R&D capacity?
Yes, there's no doubt. We've invested a significant amount of money in automation over the last 10, 15 years. And in Europe, we even have our own inland simulated terminal. So it's a terminal that's not a terminal, where we have actual yard cranes and automation working in an inland environment in the middle of Finland, and sometimes in the snow, where customers can come. But we also are testing constantly our equipment and new ideas as we bring them in. But on the other side of it, you know, in some countries, we've had automated terminals for 10 or 12 years. So the product is true and tried and tested before we release it to a customer. But it's like any innovation. Every day somebody wants something new and you're continuously investing. And luckily we're patient and waiting for the big return, because you just continue to invest and build new product, and sometimes it's nearly R&D on the go, but that's because the customer wants something new above what is tried and proved.
How do you imagine the future of industrial and terminal automation in Malaysia and of course in the Asia-Pacific region?
Because of those reasons that I mentioned earlier, where people simply have a need or desire to replace equipment, automation will start automatically, because when you buy the latest piece of equipment, it has some new technology. And then as efficiencies come in, and then we've all seen in the past 3 to 5 years where the shipping industry has been doing it somewhat tougher, and they are looking for more reliable customers. They need efficiency. And that means the container terminals need to offer them a lot more efficient service. And this is where automation comes in, as we all strive to provide that efficiency.
The Nordic countries tend to have good shipping companies and efficient companies at that.
Yes.
Do you think that this is an area for these Nordic economies to actually pick up, particularly growth, when they involve so much investment here in this part of the world, in the Asia-Pac region? Do you think that the growth will be here?
Yes, because of the volume. With the massive volume that is in Asia is outranking Europe and then America. So, that's where the three sit. So this is the largest volume, and then the trend is starting to flow. And it started down in the mature country of Australia, which would have to be the most automated country now in the world. And we're seeing that start to flow.
How do you navigate around the competition that is coming from China and perhaps India?
Technology will be how we will navigate with that. Of course, the big steel producers in China, it's hard for anyone to compete with that sort of thing. And realistically, rather than try and look at them as, say, an enemy, you're better off to work with them, and combined we can all provide customers a solution. So we're already working with some of the very big manufacturers in China in partnership in different areas. So,
Peter, that was a riveting chat, but we have to call it a day. That was Peter McLean, Senior Vice President of Kalmar of Asia-Pacific region. That wraps up this episode of Market Talk. Be sure to follow us on Facebook, Twitter and Instagram at 501 Awani. Download our app. I'm Ibrahim Sani. Thanks for watching. Bye.